Stock market review. Yes, I know I just did one last week, but we got to do it again because things are moving pretty fast. There's trade wars and volatility. Markets are exciting again. So let's jump into it. And of course, we have Alex from Macro Ops with his market brief to help us. Thanks, Alex. And Alex is pretty good at this stuff. In the last video, which if you haven't seen, I'll link to right above here, he was talking about that if we saw a rebound in prices, that was a time to lighten up your positions, not go long again, which as we saw last week, prices started to jump and then started to come down again starting Friday. So let's go ahead and update the story now. And the first thing we got to talk about is, of course, the trade wars. So from Alex's sources, he explains that Trump and President Xi of China were close to actually signing a deal, but Xi Jinping was actually forced to go back on their agreement by his fellow party members, which is actually interesting because we've talked about in our previous China videos, which if you haven't seen, I'll link to right up here, how Xi Jinping, his whole thing these last few years was consolidating his power. He went on that political corruption rampage where he basically just took out all his competitors, sent them to jail, had them disappear, the Chinese way, with the goal of consolidating his power so he stays on top and basically is like Mao. So the fact that he was held back by other party members in this deal that he was trying to make with Trump is interesting. It shows that his momentum and his power in the party is kind of slowing down. So the 7-member Politburo, or I don't know how you say that, but the standing committee had serious qualms about the enforcement mechanisms that Xi's trade negotiator, Liu He, had agreed to in the original trade draft, because they thought it hurt China's sovereignty and reminded them of past unfavorable deals like the Treaty of Shimonoseki following the Sino-Japanese War, such as the Treaty of Shimonoseki. So an enforcement mechanism was pretty important to the US because you got to be able to enforce this stuff somehow, obviously. So it looks like the deal is not going to happen for now. So the US wasted no time in responding and triggered the nuclear option, which is blacklisting China's tech giant Huawei, the world's largest provider of networking gear and the second largest maker of smartphones. So by blacklisting them, they cut them off from critical components of both hardware and software. So chip makers like Intel, Qualcomm, Xilinx, Broadcom, they are not supplying Huawei anymore. And that's a huge issue for the semiconductor industry. And if you guys remember, Xilinx was one of the positions that we were in with the Nasdaq All-Stars portfolio. We ended up taking profits right here. Next day there were earnings, the thing collapsed and we got out of the rest of our position. And you can see it's just continued to fall from there. From highs, it's down over 26%. And currently in the All-Stars portfolio, we're in Qualcomm. So that has not been too much fun. And with the Nasdaq All-Stars system, what we're doing is tracking momentum. So we are in the highest momentum stocks. So a lot of these semiconductors and chip makers were super high momentum and made us a ton of money. So you can see Xilinx, this chart right here, it's been a huge winner for us. And then recently is when it just completely broke down. And that's what happens with these trade wars. Even though they were good companies, they were making money for us, they're completely getting smashed now. And by the way, if you want to learn more about that Nasdaq All-Star system that I use, you can click this video right here. It'll explain everything. It's a solid system and we're honestly not getting hurt that badly from these trade wars because we have our risk management in place. And surprisingly, a lot of our momentum names held up pretty well. But anyway, you can check out that video to learn more. So Alex says this is a very big deal because it's basically like a big political game of chicken where the global supply chains and US semiconductor stocks are the stakes. And something interesting is that Huawei has been preparing for this eventuality as far back as 2 years ago by stockpiling mountains of US hardware, so semiconductors. So that was actually a lot of demand that was pulled forward, which means that the recent past revenues for the big chip suppliers to Huawei, like Intel and Micron, were artificially inflated. So that could be part of the reason why we saw such a massive run up in Xilinx. And this is interesting information because if you're a momentum trader like I am, it honestly doesn't matter. If the market was happy with those things pulled forward and prices rocketing, then I'm in it. And then I'm out of it when things start to turn like they did, as you saw in that chart. But if you're more value oriented and you knew that fact, well, then you probably wouldn't be getting into those semiconductors because you knew that it would turn around when things got rough. And all those sales were just pulled forward. As Alex says, those numbers were artificially inflated. And Alex says, I don't know about you, but I wouldn't want to be long any of these companies when so much of their immediate future is dependent on the bombastic tweeter in chief in some faceless 7-member Politburo standing committee. I agree. Not a good time to be in these semiconductors. And I imagine we will be rotating out of them in June. Qualcomm isn't looking great. But I'm going to do a separate video soon reviewing that All-Stars portfolio for the last month. So if you want to see that, make sure you subscribe to this channel and smash that bell. That way you get the email notification when it comes out. But moving on from the trade wars, Alex says that we should expect more whipsaw and chop in the market. Lots of volatility. FOMC minutes are coming out on Wednesday. Fed members are giving speeches, including Fed Chair Jerome Powell. Now, if we move on to our sentiment indicators, which we always look at, there's been a huge reversal. So one of the ones we look at is the 10-day moving average of the total put to call indicator. indicator. So you can see here in May, it hit this bottom red line and was actually a great sell signal because markets kind of tanked from there. But now this indicator, which is this yellow line right here, it's actually flipping to the upside. So instead of complacency, now it's showing almost extreme fear because it's coming up right next to this green line. Now, as Alex explains, this indicator is better as a sell signal than a buy signal, but this reversal is definitely bullish, especially if it moves higher and crosses that green line. And again, sentiment always works kind of the opposite way, right? If people are super bearish, that's good for the market because that means there's more money to flood in. It's that wall of worry still there to climb. If people are too bullish though, that means they might be over leveraged, have all their money in. There's only one place to go after that, right? Out. So you want people being bearish from a sentiment perspective so the market can keep climbing. And remember, sentiment is only one input into the total picture. You can't base your decisions just solely off that chart that we just looked at. So another indicator we look at is this AAII bull bear net sentiment, which has become pretty bullish recently, which again, not a good sign. But now, as you can see, this yellow line is completely reversing, heading lower. It's approaching levels that have marked intermediate bottoms in the past. So Alex says the near-term technical and sentiment positioning picture is as muddled as ever. The fundamentals are clearly deteriorating, but there's a number of developments that can reverse things, at least for a short while, like Chinese stimulus or a major change in Fed policy. But he says, of course, there's an equal, if not greater, number of plausible developments that could really torch things now, like more negative trade war developments or the US bombing Iran. And when things are muddled like this and there's uncertainty, which I think we talked about this in the last video, but the market hates uncertainty. So you can expect a lot of volatility as prices try to figure out what the new narrative is. Tough to figure out what's going on when Trump can tweet anything at any time, right? Uncertainty is no good. So me personally, what I'm doing, I'm just sticking to my system. I know my risk control is in place, so if stops are hit, I'll get out. But I'm not gonna make any changes even with this fundamental news. Like, I'm not gonna exit Qualcomm early because that would be breaking my system. That's just not my strategy. You gotta stick to your strategy. So if you're more of a discretionary trader, then maybe you listen to this video and you're thinking, okay, I need to lighten up on my positions. And that might be a good idea. Or if you're completely discretionary and you're in a semiconductor stock right now, it's probably not worth it to stay in. Like Alex said, the market is gonna be pretty volatile going forward, and you could expect even more volatility in the semiconductor stocks. So hopefully this video helped clue you in into what's going on, and you can use this information to adjust your portfolio, or don't adjust it. But if you want more videos like this, then make sure you subscribe to this channel and hit that notification bell so you get an email notification when the future ones come out. We're publishing almost every single day, all markets and business related content. So subscribe, and I will see you in the next video. Stay fallible out there. Bye.